Hello, I'm Bart Pelton with PelRay International, a division of Brush Fibers, Inc. For many years at the annual Mop and Broom convention in St. Louis, I would prepare a report on commodities and currencies and how they would impact the raw material costs for our industries. We haven't been meeting since COVID, but Dylan Goodwin of Brushwares asked me to go ahead and prepare a report that he was going to publish in Brushwares, and I told him I'd be happy to do that. And there's things going on in the industry that you need to be aware of. So we'll start with our report on commodities and currencies in 2024. And here are some of the people who are in the news that are going to impact our outlook here. It's already started to impact things, and will definitely impact 2025. And of course, you see President-elect Trump and President Claudia Sheinbaum of Mexico. She was elected in June, and of course, Trump just recently in early November. And one of the things they're talking about is trade. So I'll go into currencies. A lot of us import and export to Europe. This is how many dollars it takes to buy a euro. It's been fluctuating, and although this looks like it's been going up and down a lot, it's not. This is $1.05 and this is $1.12. So it's been in a fairly tight trading range, nothing dramatic. And if you go back to where we were a year ago, slightly lower than a year ago, but not dramatically. I would say, as far as imports from Europe goes, ocean freight rates probably impact our cost more than the exchange rate, at least in this last year. And, well, ocean freight's a different subject. Then we'll go to the Mexican peso. This is this shows how many Mexican pesos a U.S. dollar buys, and this is a multi-year chart. I went all the way back to 2021 to show you what's been going on for the longest time here in 2021 and into late 2022. The peso was fluctuating in a fairly tight range, around 20 to 20.5 to 1. Then we had a period of sustained strength in the peso, driving the peso up probably about 15-20%, depending on what you want to use your start point. But the peso got all the way to 16.5 to 1, which is a huge move from where it had been. That put a lot of cost pressure on product coming out of Mexico for you importing brooms from Mexico or broom corn from Mexico, Tampico. All those prices went up as the value of the peso increased and the dollar declined against the peso. Now, of significance, right around here in June, that's when they held their presidential election. And the financial markets did not like the results. That's when Claudia Sheinbaum was elected. It wasn't so much that she was elected, but she got a supermajority in Congress, which allows them to change the laws and make it Mexico perhaps a little less democratic than it has been in recent decades. Anyway, since her election, the peso has been weakening. Then when Trump was elected, it weakened even further. And then even recently with the threat of import tariffs, it's continuing to weaken. So it's back to where it was a few years ago. And that's taking a lot of cost pressures off of what's being imported from Mexico. Don't expect prices to go back to where they were in 2019, because in the meanwhile, we've probably had a cumulative 15 or 20% inflation in Mexico. But this is certainly going to help as far as our cost on Mexican imports. A lot of us do business in Canada, both importing and exporting. The exchange rate is significant. Here. Now this range isn't huge. We're at $1.32, around the beginning of the year. We're about $1.40 now, so that's about an 8-cent move. That isn't as impressive looking as perhaps the chart is, but it's still the U.S. dollar in terms of Canadian dollars is more expensive than it has been in years. So basically, if you're a Canadian looking to buy U.S. dollars, you're looking at a 40% premium for U.S. dollars. And so that's making our exports to Canada less competitive, and it's more challenging for Canadian importers, particularly who are selling retail, to hold their prices in Canadian dollars. And right now, I think the threat of tariffs and stuff like this is driving the Canadian dollar weaker. A lot of us, or some of us, import wood handles from Brazil. That's why most of the hardwood handles used in this industry is Towery, imported from Brazil. So the exchange rate matters with Brazil, and you can see the Brazilian currency has gotten weaker through the years, through this last year. This is a 1-year chart, so maybe 4.75 to 1 or so, to almost 6 to 1 here recently. And they do have domestic inflation in Brazil, but we're thinking, the cost on importing product from Brazil is coming down a little bit. Some of that has been offset by higher freight rates. Okay. Kind of sensitive. Okay. More and more people are looking at an alternative from China for low-cost imports. India is one of the beneficiaries. I think more companies are looking at importing from India. Our particular industry is importing PelRay fiber from India and some mop yarn also, not very much in the way of mop yarn, but the rupee has been, this isn't a big range. We go from, around 83 here to 85 here. So the rupee has weakened, but not dramatically, just a few percent over the last year. China is, the value of their currency has always been a concern. There's a continuing thinking that the Chinese keep their currency undervalued to promote their exports. There's probably some truth to that. They do control their currency pretty tightly. So this isn't really a free floating currency, but it has weakened here recently back to where it was this summer. This is not a big spread, 7.05 to the dollar to about 7.25 to a dollar. So just a few percentage points, and not that far different from where it was a year ago. Unlike a lot of the currencies you've been looking at, where the dollar has been buying more and more, throughout the year, the South African rand has been strengthening against the dollar. Here last year it was around 19. Now it got close to 17 at one point. Right now it's around 18. I think the price of gold has been driving the rand higher. One reason I follow this currency is we're importing broom grass from Lesotho, which uses the South African rand as their currency. And So, and the broom grass is a popular substitute for broom corn. So that's the reason we follow the rand. And I'll go ahead and take a break right now, and we'll switch over to talk about the stock market and commodities. Okay, next I'll briefly talk about Bitcoin. This is not a real currency. It's a cryptocurrency, as you know. Some of you may speculate in Bitcoin or other cryptocurrencies. There's even ETFs available on the stock market now that are linked to the value of crypto and Bitcoin. The cryptocurrency lobby donated heavily to President Trump and his reelection. So I expect the government regulations and control on cryptocurrencies to be, very lax for the next 4 years, and that's, I think, is behind the recent rally. I think this is also kind of a measure of how much speculation there is in the economy. Here's a really beautiful chart if you're a stock market investor. This is a chart of the S&P 500, and you can see we have been in a sustained bull market all year, right now at very close to or at an all-time high. The financial markets are pleased with the results of the recent elections. We don't know. I don't know if that's going to continue, but for right now, the stock market is performing very well. Now, one thing I look at, and I last did one of these reports 4 years ago, and in that report I predicted that we'd have some serious inflation coming at us because of all this economic stimulus during the beginning of the COVID epidemic. At one point, the U.S. money supply had grown 25% year over year. Not all economists, follow the money supply anymore or even think that it's that important. I'm a bit old school. I think if you print more money, prices are going to go up. And that is basically what happened at the beginning of COVID. At one point, the Federal Reserve was buying or monetizing $75 billion worth of government debt every month, which caused this explosion in the money supply. When Chairman Powell realized that things were getting out of hand and started raising interest rates and quit buying bonds, the growth in the money supply came down, even went negative for a while. One of the reasons why inflation has declined from the almost 10% a year down to about 2.5% or 3% a year is because the money supply has not been, the Federal Reserve has not been allowing the money supply to grow very fast. Okay, now we'll get to commodities. None of us use gold and brooms or mops, but it's still an interesting economic indicator. In some cases, it's a proxy for inflation, but also parts of the world that are threatened by war or in war and stuff like that. Gold is considered a refuge, a safe place to invest your money. And gold has been on a rally this year. A year ago, we were at about $2,000, a little less than $2,000 an ounce. And here recently, we've been close to $2,700. And at the moment, the rally seems to be continuing. Crude oil. This is also an amazing chart. A lot of people expected with the wars in the Middle East and Eastern Europe for oil to get considerably more expensive. It did not happen, partially due to record production in the United States, partially due to lack enforcement of sanctions on Iran, Russia, and Venezuela. The thinking politically during the year was that high prices for gasoline would hurt the Democrats' chance for re-election, so they kind of laid off on enforcing sanctions, allowing a greater supply of oil. Oil isn't cheap, but it is about the same as what it was a year ago, in spite of a rally in there, and really much lower than a lot of economists forecast. And then we'll talk about natural gas, which is used for generating electricity in the United States, but it's also a feedstock for production of plastics and stuff like that. To some extent, natural gas prices are seasonal because we use more electricity. A lot of this is used for heating homes and factories and stuff like that. We use more during the wintertime. We've got a outbreak of cold weather right now in much of the northern and eastern United States, pushing up natural gas prices. Once again, people, even though it's high, it's still only $3.30 per, I think 1,000 cubic meters, or cubic feet rather, and historically that's really a pretty good price. And we're exporting a lot of natural gas too. The natural gas prices are cheaper here in the United States than just about anywhere in the world. It's a real advantage for our manufacturers as well as consumers. We follow cotton not because mop yarn is made out of virgin cotton, but the price of virgin cotton does affect the price of mop yarn. You can see mop yarn prices spiked earlier this year. They've been coming down since then, now around 70 cents a pound, a few cents less than a year ago. This is one reason why cotton mop yarn prices have tended to be stable or even soft here most of this last year. Okay. Oops. That one doesn't belong there. Okay. This is the price of lumber. It's been up, it's been down, up, but not that much different from a year ago. I like to watch lumber futures because they impact the price of wooden handles. Right now, a lot more of our handles are being manufactured in the United States than it used to be the case, southern yellow pine being the species of choice for broom and mop and brush handles that are produced here in the United States. Hold on, they got in there by mistake. We follow copper prices. Copper is used so much in industries that it is often looked at as kind of a indicator of economic activity. Once again, it was higher earlier this year. It's come down here some, and part of that is, the economy's not growing. The world economy is not growing as fast as what it was. Now oh, come on. Well, I guess I could have done that one at a time, but we'll go over it. Here's some things that I consider important as far as our economic outlook next year. The Republicans have a majority in both the House and Senate. As a result of these majorities, they will be able to pass much of President Trump's agenda. I think particularly regarding tax and budget issues. The trade policy is, well, unpredictable at this point. President Trump has recently threatened 25% import duties on Mexico and Canada, an additional 10% on China, 10 to 20% across the board. He has authority to do a lot of this without congressional approval, so he can do a lot of it by executive action on using existing laws. President-elect Trump thinks that tariffs are, very useful. Now, are they useful as a negotiating tactic, or is it something, long-term to encourage domestic manufacturing? From my study in economics, and I did study economics some in college, I don't have a degree in it, tariffs are a terrible idea. This could be some of the worst economic policy since Jimmy Carter's windfall profit tax or Nixon's price control. Well, we just don't know how it's going to play out, how much of this is negotiating and how much of it is going to actually stick. But if the tariffs are put into place, it will hurt the economy, and it will hurt the economy of our trading partners, and will invite retaliatory tariffs. The end result in nobody wins a trade war, everybody loses. Now, one thing positive, the tax cuts of 2017 are almost certain to be extended at this point. Those tax cuts cut marginal tax rates, they cut rates for corporations. It was very positive for improving investment in supply productivity. There's some other tax cuts that may not necessarily be so supply-sided, such as cuts eliminating taxes on Social Security, on tip income, on overtime. I don't think those will do that much to, stimulate supply, but it could stimulate inflation. And of course, reduce business regulations, particularly on energy, but in other areas of the economy, that's going to be positive. Large budget deficits, that's going to continue too. That is a big concern. And at the moment, the Fed is lowering interest rates. The money supply growth is starting to increase. We'll start seeing an uptick in inflation next year. And I would normally say any questions, but since I'm not in front of the group as I usually am, thank you very much.